everyone is talking about Deutsche Bank. I received dozens of emails, everyone freaking out about Deutsche Bank. Let me set a few things straight. Number one, Deutsche Bank has not just surfaced as a problem in the financial community. This has been an issue for a long time. The size of the derivatives book has been known for quite a bit of time. That's number one. Number two, and maybe more importantly, right now is not a time for us to have staunch opinions about whether this company is going to get a bailout or whether it's going to get bought from someone else or whether they're just going to go out of business. No one knows, okay? Just like no one knew about Lehman or Bear Stearns, no one knows exactly what's going to happen. So this is not a time to make any staunch opinions. From a trading perspective, there's always something setting up. But other than that, making any systemic bets on Deutsche Bank stock or its credit default swap, which is this thing here, none of that makes sense. And by the way, while we're on the credit default swap, I want to quickly point out that right now, the credit default swap is actually nowhere near where it was in 2011 during the Euro crisis, or it really hasn't moved all that much all this year. So just a little bit of perspective on that. Now let's look at a couple other things. A credit default swap is essentially a bet on a company's creditworthiness. And you can see here, this is the CDS that I just showed you on Deutsche Bank. Right now, we're currently around the 240s or so, which is really not much different than where we were like in January, February, and certainly well below where the CDS or the credit risk for Deutsche Bank as a counterparty was back in 2011. At the same time, the headlines continue to be fast and furious around Deutsche Bank as a company. And if we now move over to the stock price, you can see that 30-year low that everyone's talking about is certainly looking quite nasty. And there's a lot of reason to believe that this could ultimately cause a further unraveling of the company. The problem why no one knows if this company, Deutsche Bank, will go out of business, get bought out, or will just merge with someone else, is because we don't really know how quickly clients are going to jump ship. What we just had over the past couple of days, headlines of some hedge funds starting to take some of their business to other brokers. The more that snowball effect takes place, the higher the risk is ultimately of the company essentially coming into a real cash crunch and having to shut down, which is essentially what happened to Lehman and is what almost happened, or I guess just about happened, to Bear Stearns. So that's the real issue, and that's also exactly why no one knows what's going to happen. Lastly, looking at the two major stock listings for Deutsche Bank, here the New York Stock Exchange listed DB, ticker symbol, and of course this one over in Frankfurt, the main listing DBK over in Frankfurt. Regardless of which one you look at, yes, there may be some trades to do on a very near-term basis, but keep in mind that the stock is going to remain volatile and it's going to be very much a gamble if you hold the stock overnight. In my opinion, this is a no touch. I hope this makes sense, guys. I hope this helps, and I'll see you in the next vlog.